And when investors go to a startup, they always actually say that more than 50% is team.
How Debitum was able to grow at this speed while still maintaining the portfolio at a high level.
We're all big boys and we want to get return and we do investing. It's okay that sometimes there are defaults. It will happen in financing, but the most important thing is that you kind of understand what you signed up for. That's our approach.
In terms of a sum, let's take a practical example.
The worst thing you can do is make an investment and then you don't align with your emotional profile. As Mike Tyson said once that everyone has a plan until you get punched in the nose.
Kaip jums skamba tokia statistika? 100 milijonų eurų paskolinta iš 17 tūkstančių investuotojų su 0 defaultų. Mane iškart sudomino. Tai šiandien kalbinam Debitum CEO čionais Vilniuje studijoje ir tikslas buvo pakalbėti apie platformą, pakalbėti apie investuotojus, pakalbėti, ką galima pasiekti investuojant į P2P ir kur apskritai šitas investavimo būdas nukeliaus per ateinančius 5 arba 10 metų. Labai vertingas pokalbis visiems, kurie investuojate į sutelktinį finansavimą ir apskritai norite pasižiūrėti, kurios platformos yra geriausios jums. Keliaujam tiesiai į pokalbį. Welcome to the studio, Eric. Jumping straight to the questions, because I think you have so much information I need to get out of you today, and we don't have that much time. How does P2P lending fit into today's broader investment landscape, and particularly for retail investors looking for diversification?
P2P differs from other investment classes in one particular way. It's relatively easy to access it. It has very low barriers. For example, many in our industry have 50 or 100 euros. We, for example, have minimum investment ticket of 10 euros. So that's very easy kind of to start for an individual to invest, because peer-to-peer is, in essence, it's a bit higher risk and higher return asset class. So in long term, if you diversify well, it works very good, even if it's higher risk, because you also target higher return. But one thing which I've noticed is very important, for example, in the Baltics, that to put it very simple, when there was, moms and dads and previous generations, they were always taught that, for example, in Soviet times, that you get to the retirement and then government takes care of you. So savings and your retirement plan will be there. You don't need to worry about that. But I think that nowadays the world is shifting, that government is not going to be your treasury. So I think Estonia did a few years ago, I think some people called it social experiment, that you have pension scheme in several layers, and one of layer is kind of part of your social tax goes to your pension, so to speak, when you retire. And Estonian government had this quite creative idea that why not to cancel one layer and pay it back to citizens. So a lot of Estonians opted for option that they would actually like to withdraw and use that money. Some of them spent it, some of them bought real estate, some of them invested. The whole idea basically shows that the world is shifting into new reality, that when you retire, probably me and you will retire, we will not have a pension in full amount. So we will not have the same disposable income. So that means in general, people need to, as my wife says, you need to own the process. I mean, the process of thinking from individual's perspective, how you make sure that you will have savings when you retire. Because in Latvia this year, government in tax reform, they actually reorganized few things in pensions. So basically less percentage out of your social tax goes to pensions. So that means that people will have kind of bigger disproportion what they earn now, and when you retire you expect that you will have the same comfort in life, but actually the pensions will be lower. Peer-to-peer is in general very good way how to start investing, learn what is investing, and then it's up to an individual whether you go for less risky asset class, whether you go for something more exotic and higher returns, whether you diversify with stocks, bonds, whatever. But peer-to-peer, in my opinion, It's super easy to access. It has super low barriers, and the certain advantage you get as an individual or society, you really learn as a habit to do investments.
You mentioned quite a few things, so I want to pick that statement in bits a little bit. Starting from the point that each individual can invest 10 euros, and each individual who's in their, let's say 40 or less in age, most likely going to struggle with the amount of money they get in pension. Do you think 10 euros a month is something what would give people enough that additional income in the pension age, or should that be significantly bigger sums?
No, mathematically, the most popular view is if you invest 100 euros additional to what by default you have in your pensions, etc., then actually you can get quite a big amount, because if you reinvest it, then the interest rate is compounded. So it actually, you would be surprised how a small amount of money within 20 or 30 year time span actually can generate quite a big amount, which gives a certain cushion. But again, 10 euros per month, that's not a lot. But I think that for investors, it's better to do small amounts in the beginning to get comfortable, to understand the landscape, the risks. And maybe if there is economic cycles are always going up and down, once in a while. So every 15 years or whatever the opinion is. So you never, most of people cannot time perfectly when to enter the investment market. So
no one can.
No, probably no one can. And that's why I think that you need to always diversify. You need to start slow. So basically, good things come slowly. So 10 euros is better than nothing. 10 euros in general, a person owns an investment and starts thinking about it and starts spending energy and time with it within the whole space. So I think that's already a lot.
Could you help investors understand the significant difference between P2P lending and traditional bank loans, and from both the investor and the borrower? Because we do understand, the business wants to borrow the money, and initially they want to borrow it as cheap as possible. But in a sense, investor wants them to borrow it as expensive as possible for them to earn most. But that bank situation and P2P lending situation sometimes is unclear. Could you share a little bit of light there?
Yeah, first, peer-to-peer is a very broad term. Yeah, peer-to-peer includes licensed platforms, not licensed platforms. Yeah, these are two different things in many cases. Peer-to-peer space includes someone who invests in real estate with collateral and with very precise, for example, loan-to-value calculations and very objective criteria. Then peer-to-peer includes payday loans, where there's a certain challenge to get actual physical collateral, which in real estate is a real estate, and you put a mortgage on it. Then there are peer-to-peer platforms which invest in business loans, which is basically lending money to a company and business, copy-paste as the banks do. So peer-to-peer industry has in general a very big challenge that it's broad. It's apples, oranges, and also potatoes.
Let's narrow down the fruits.
Let's narrow down to something concrete. So
let's take Debitum as example.
For me, it's easier, exactly, to explain what we do in Debitum. So we focus on business loans. So that's very much similar to what the banks do. We do full analysis of financials, of business plan. We really try to pick businesses where we understand very well what the company is doing and what do they plan to do. We always have mindset that you might not have foreseen everything, or externally something happens, and then it basically goes down to what collateral you have, because collateral is like insurance. If you miscalculated something or your assumptions were wrong, then at least you have collateral, so people will not lose money, or in worst case, they will just lose tiny bit, not most of it. Which mathematically also kind of makes sense, that sometimes defaults happen, but the question is how much you can recover. Because if you get 15% return and you have a portfolio of, 15 investment opportunities, then even if one defaults, the question is, does it default in full amount or you recover 90%? So we in Debitum are probably very close to banks because we're regulated. We're having a lot of procedures and analysis and financial people in the team. But there is a difference because the banks are targeting, shall we say, in the Baltics now, 3, 4, 5% annual plus Euribor, which has gone a lot recently, but it's 3, 4, 5%. Peer-to-peer is higher, but then you have in between smaller banks, not Scandinavian banks. You have some mezzanine financiers which go to 8, 9, 10, 11%. And peer-to-peer historically targets something around from 10 to 15. So that is, we financial people, we call it mezzanine layer. Yeah. So you usually have a senior lender, which is bank. They go for really low interest rate and relatively lower risk. But then there's always a challenge for growing companies that you already can see in the middle of year that they have a trajectory, but the banks are telling, let's wait next year. Let's see the audited results. And the owner of the company always has a challenge. Do we do it quicker or no? That's like driving a car. Do we do 50 kilometers per hour or 70? Yeah. And there's no right or wrong answer. It's just of subjective perspective. And those who want to drive at 70 kilometers, not 50 kilometers per hour, then they need to approach someone else apart from senior lender. Someone else who says, for example, if banks usually finance debt EBITDA, you kind of have debt and you have earnings which business generates. They go for 2, 2.5, 3 ratio. Then mezzanine financiers and peer-to-peer in Debitum case is very similar to mezzanine financiers. They are also with 3.5 or 4, so they do take higher risk. Yeah. But again, it's kind of compensated with higher return. So in essence, we in Debitum, the model or the mechanisms or the philosophy is basically the same as in the bank, but the difference is that we are smaller, so we need to move faster, quicker, more flexible. And there are a lot of smaller niches where the big banks don't want to go there. Yeah. So our philosophy is to find someone like we, for example, have a company in UK which is financing advertisement, mobile game developers, and they basically give money to a company which has already sold their product to Google or Apple, but Google and Apple says that according to terms and conditions, they will pay after 3 months. So they need money to, again, not drive with 50 kilometers per hour, but 70. So they want to develop quicker and they need cash. So our partner whom we finance, they actually kind of takes a future receivable, Google or Apple, which is not the worst receivable, but after 3 months, and they will receive it. So far, we've worked for 3-4 years with them, and there's zero default for obvious reasons, because Google tend to pay on time. But the smaller companies, they're also happy because 3 months earlier check means a lot for them. Yeah? And we also in Debitum think that business lending is something kind of also for us quite attractive ethically, because we actually support small and medium companies which sometimes have a challenge to convince big banks to trust them and already provide financing. We actually have a track record in Debitum. I don't recall concrete figure, but 4 or 5 companies, they've entered Debitum, they've used Debitum's financing, they've grown, then they can go to a big bank and show that they have this audited financial reports. And as soon as the big bank says, okay, we believe you, we refinance you, it's cheap money. And of course they say, Debitum, unfortunately, you can't compete. And that's for us not something bad news, but we actually encourage it in the team. The more success stories we have, the more we've actually given kind of back to community. But to answer your question, the balance is the key word, because investors want to get highest return, the entrepreneurs want to have lowest interest rate, but we we need to meet somewhere in the middle, and investors also need to understand that unfortunately, the higher the return, there is certain risk priced in.
Let's talk about that one a little bit, because you mentioned quite a few times, and sometimes people think that, I open Debitum page, I see 0 defaults, I look at the loans which are available, and I think, 12 months, that means I'm going to add, 1K, 10K, whatever, I'm definitely going to get the money back within the 12 months. And track record is a strong piece, but there's always risk association with this type of investment, any type of investment, really, it's just higher or lower. Would you be able to share a little bit about like common risks associated with investing into projects like that? And you mentioned quite a few times the collateral side. Like, how does that work for a simple person who just sort of figured out that there is this opportunity? What should they know?
So there's always a risk in investing. If someone says that something is risk-free, then
scam. Thank you very much. Bye-bye.
No. then maybe it happens sometimes, but it's very rare that you can
not in double digits
get return and there's no risk. So there is risk, and there should be risk. Otherwise, it doesn't make sense. So how we have managed to, because so far we've issued loans in amount of 100 million euros. So
very nice number.
No, actually a bit more, but at least 100.
It's a good milestone.
Yeah. We also celebrated it in the team, because in the Baltics 100 million is actually small or big, that's relative, but it's a significant figure for our financial capital markets. And there is no simple recipe how to get. So far, we've had 0 defaults, and I think tomorrow I saw the report that there's actually 0 late payments from our partners. But we want to always to talk about risks, and investors should understand that there are risks. Yeah, because there's a layer which you cannot foresee. For example, when the war in Ukraine started, we historically have few loans in a Ukrainian leasing company, which we restructure. Yeah? So that probably will be first default, where we will recover most of money. So I always say that we have 0 defaults, but there's one case which is restructuring, and again, to be very transparent. So it's it probably won't be a perfect score anymore, but actually this month we plan to inform our investors about the whole thing, and we will recover most of the money. But again, default is one story, how much you recover is a different story. But for us, success has been for several reasons. We have never tried to finance many companies. We actually have quite a few companies or partners we finance. A lot of criticism from our investors community, for example, has been for why so few. Yeah, and we try to tell again and again and again. Yeah, it's very hard to finance 100 companies, focus on them, monitor them, really check the pulse. Yeah, for 100 companies, for example. Yeah, so we choose a strategy to have fewer companies, but really know them, communicate them, and to really feel if there's a problem and react really quickly. So that's one thing. Second thing, which for us has been success, is Debitum is a bit longer than I am in Debitum, because me and my partner, we acquired the platform. It was existing and working, almost 2 years ago. So we basically changed almost all team. We have changed a lot internal processes and risk management, and basically from A to Z, a lot of things have been changed and improved. So I think that the biggest factor why Debitum has been performing so good is team, to be honest. It sometimes sounds simple, but I come from more than 10 years background from financing and corporate banking. And when investors go to a startup, they always actually say that more than 50% is team. Not the idea, not the product, because in startup a lot of things change. but the team is one fixed component. So for us as well, there's been so many situations that you need to react, make the right decisions. So team has been super important, and we've been very lucky to have really dedicated people who actually make things work and make sure that everything's good. Yeah.
So getting back to that risk awareness for someone who wants to start investing now, they'll open the page, they'll see a project. Can you help them understand that collateral piece? Like what should happen? And again, hopefully that wouldn't happen. Obviously, it's normally statistics shows that it's a small percentage, but how would that collateral support individual?
It very much depends on concrete partner. For example, in the UK case, we control their internet bank, so we physically see their cash flow. We always have legal claim rights on the receivables they are having. So in a case that there's a deviation from payment schedule, we can always enter the room, so to speak, and we can say that we block accounts, and the money from Google and Apple coming in, we can kind of control it. Yeah. And in that case, receivables, but since they are A-level receivables, that is the collateral. We have legally claim rights on kind of not the partner company we finance, but the partner's company receivables, which are A-level receivables. We also finance a small financial institution who finances small and medium enterprises like cafeterias, restaurants in Estonia. So we also make sure that we regularly see who they finance. Their receivables are monitored, that they pay on time. And we also ask them to make a long list of receivables, more than they owe us. In case some of them default or there are some problems, we have extra receivables which are healthy. So we have also claim rights on that. Then we have other partners which have, for example, acquiring forest properties. So then it's more straightforward. We have a pledge on physical assets. We monitor how much they have spent. So we actually can see very objective what's the market value of the asset. How much, again, like LTV, similar to banks, loan to value. Then we monitor that our financing is not more than real-time market value of the assets. So we also have pledges. Yeah, legally it's done that below the platform we have subsidiaries, because our regulator asks to have separate legal entities for each partner. So our controlled legal entities have these pledges, claim rights, and do the monitoring. And to be honest, since we're regulated in Latvia, after certain events in Latvian banking system, I think Latvia is famous with having one of the highest standards in EU in financial capital markets regulation. So I'll give you an example. When we offer an investment opportunity, we have a prospectus, which is a fancy word. In general, it says to whom you lend, what the company is doing, what are the financials, but the regulator sets very strict regulations that there needs to be disclosed this. Basically, the prospectus is very similar to when in stock exchange you issue bond issues. It includes a lot. It's like 50, 60, 70 page document. So having said that, I don't believe, or I'm confident that every investor can have capacity to read everything. Yeah,
I'm like 100% sure it's not.
Yeah, but I hope that, for example, in first few investments, investors actually open it and at least scroll it, because we also have section for risks. Yeah. Where we legally need to disclose whatever risks might be. Yeah, so we always hope that investors kind of spend at least few minutes to go through and think what are possible risks. Because the biggest frustration is that someone invests and the result is not perfect. But then there's a frustration because the investor didn't know what he signed up. Yeah? Because if we're all big boys and we want to get return and we do investing, it's okay that sometimes there are defaults. It will happen in financing, but the most important thing is that you kind of understand what you signed up for. That's our approach.
From your experience now, and I get the idea that, not having the defaults most likely or not having that many lates, you don't have that much of experience in this where people don't get what they signed up for. But again, as the platform grows, that's like statistics are there for a reason. I'm pretty sure that you're going to have defaults purely because you're expanding at that level. With the last year's growth, so if that continues, like again, let's see what happens. But I do think that at least few businesses where you do see unforeseen situations, they do end up in problematic states, and you do have to go through a specific process of getting your money back potentially from collateral. So my thought is do you think that's a big problem that people normally jump into investing world without actually understanding what it is, or actually understanding what the risk profile is, actually understanding what, like you mentioned, we're all big boys and we go through the process and we know what we're investing in. And I think that majority of us, majority of retail investors just decide based on pictures.
Yes and no. For example, if you've invested in crypto for last few days, the question is
Few years, maybe.
whether I understand the crypto or whether you understand the crypto. So it's actually not, how to say, it's very ambitious for me to say that who should understand at what level, what things. In general, if you talk about different asset classes like, gold or stocks or some fixed instruments, they're all different. They all have different risks. Who understand? I'm pretty sure that no one understands everything. Yeah, so there's
100%.
Zero chance that everyone understands all the risks. But I think that in our platform, we see that people invest at the beginning smaller amounts.
Yeah.
Then they see that the platform delivers. Then sometimes when, for example, someone is late, not default, but late, then I think people experience and digest, it actually can happen. What if it defaults? Yeah. And I think that if you do the investing properly, not one day all your money, but do it gradually and learn it and understand also the emotional side of investing, then people learn it by doing. So I think that just do it gradually and you'll get there.
We talked about growth a little bit, but I do want to sort of pick your brains on this one, because the growth for the last few years is phenomenal. 100 million in Baltics is ridiculous high number if you account that it's zero default rates in a sense. How Debitum was able to grow at this speed while still maintaining the portfolio at a high level? Because otherwise we would see, ridiculous amount of defaults like some other platforms. Not gonna names.
I think there's a few pieces. First, me and my partner, we come from financing where we've experienced also 2008 and 2009, especially in the Baltics. It was harsh when there's a lot of defaults. Yeah, or real estate sector was hit hard. So I think we both with partner have experienced not just giving away money, but also feeling physical gravity of when you need to get it back, and the safeguards and checks and balances you need to have. I think that we've managed to be consistent. Initially, we set a strategy which companies or at which growth stage we target, and how do we price them, and where's our risk appetite in general. So I think the success is not to get carried away in the process, because when you get growth, big numbers, you want more. But I think we've somehow managed to maintain this balance, in speed and appetite. So we've grown last year more than 2 times in investor base, in assets under management, but still we spent quite a lot of time before we became a bit more quicker and aggressive. We did a lot of homework. We did a lot of kind of agreeing on what we will do and what we will not do, so that in process, when when the party starts, you don't really get carried away. Also, we've done a lot in investing in team, because I think we are quite ready if there are defaults that, for example, legal people are there and they're well equipped to deal with that situation. We've also invested a lot in financial analysis, how we set up the agreements, how we set, similar as banks, covenants, so that if our partner who receives financials deviate from their plan, we very quickly see it through covenants. So there's, I think, for Debitum, it's been last few years really quick growth, but people behind Debitum have been in the financial sector for very long time. So I think that's the success.
Now, I think it's potentially towards the same answer, but I still want to ask it just in case there's some additional here. But what does it take to build sustainable and resilient P2P platform that can adapt to market fluctuations? Because you mentioned 2008. Again, Debitum hasn't existed then yet, but we had a sort of blip in 2020 with pandemic, and market sort of felt it. But again, building the business which can double at this level, 50 million in assets under management in 1 year sounds very strong numbers. I haven't even taken into account that your team is like 16 people, if I'm correct.
Less.
Yeah. So what does it take? Is it exactly like the experience you mentioned, that majority of people are very, have a skill set which is required? Is it the management in a sense of building that goal? Is it the what's the secret recipe to build it in a good way?
I think all things are very simple. So we're in a business of lending. So we give money to a company, and the biggest problem is if the company cannot repay it. So the most important thing is to make right choice of a company. So there might be a company which needs money, but it's too risky, and out of 10 cases you will have few defaults, and that ruins everything. So if you make the right choice where to invest, that's a very good foundation for success. But as Mike Tyson said once, that everyone has a plan until you get punched in the nose. So that's the second part, where we think that you might be one of the smartest kids on the block, but it still can go unexpected. So right choice to whom send money, that's number one. That's a good foundation, but that's not a insurance. So insurance for us is that we try to structure loans where we have actual collateral. So if you have actual collateral, again, financing has been for more than 100 years, and this is proven mechanism that I hope you return money, but in case you don't, what's the plan B?
Trust but verify.
Yeah, and collateral in business lending, I think, is not the only solution, but it's a very good solution.
Now, considering the platform has a team of very experienced individuals, what do you think individual investors should know when they're choosing specific objects of investing? Or should they just go, pick, I don't know, if I'm planning to invest 100K over the next 12 months, then I want to invest in 100 projects, invest, 1K in each to have diversification, and that's it? Or should they be do their own homework and investigate each object to the level of detail available, review every single line? And again, the platform already does the homework. So where do you think the retail investor should be? Maybe a little bit more in the beginning, but yeah.
No, that's a complicated question, because there's actually a lot of things investors should investigate before choosing a platform, choosing investment opportunities in the platform. So starting from reputation, because there are always concrete people behind the platform. So there are sometimes red flags, sometimes there are no red flags, but people are, I think, quite important who are behind the platform.
Who runs the company?
Yeah, and what people have done before, and what competences they have they proven when things are not all sunny and everything's great. Yeah, how do those people reacted in previous business operations? So people is a big part. Second part is we are very big fans of licensing, because the regulator does a lot for the investor. Hence the license. The whole idea for the licensing is to protect investors for, shall we say, dummy mistakes. Like when you do something wrong in the computer asks you, "Are you sure?" So that's the regulator. They not always, 100% sure, but in many cases, the regulator through the licensing has eliminated those dummy mistakes. But also, I think that if you invest, you should always spend a little bit of understanding, at least where, in what concrete industry or what concrete company the your money goes. You should always check at least high-level financials of businesses. Your invested money goes to. So there's a lot, to be honest, to check.
How do you, as a company, look at ensuring transparency and trust? Because I've read quite a few things on the platform website, like great work on that one altogether, very user-friendly in a sense. But I've seen quite a few notes about ensuring transparency, and you mentioned it on our conversation as well. But especially when things go wrong, how important is that for Debitum to actually play with open cards in a sense? Because it's still building relationship between investors, between the businesses, and in that triangle. How do you balance that out?
Well, in old money industry, where you have professional investment funds and LPs or limited partners, I mean the investors who finance investment funds, they always have thought that if you have a problem, the best solution in long term is to talk about it. The worst result you can get is if you just, like an ostrich, put your head in the sands and ignore. And it is hard, because if
quite a few businesses choose that.
No, but for obvious reasons, because it's hard to talk about failures. It's you need to. It's uncomfortable, so you hope that everything will be okay, and then you'll come up with good news, but not always it happens. So I think that you just man up, and it is what it is. If there were mistakes, you talk about them. That's not ideal situation, but it's the
I'm
best
just making
you
a
can
note
get.
of don't be an ostrich. This is a great call.
There are unpleasant situations, but that's the best you can do in them. Just communicate. So now we have this challenge I mentioned you with Ukraine. So we will put as much information as possible about the case, because they have a moratorium in Ukraine, for example. The debt cannot be serviced. So by Central Bank of Ukraine, when the war started, they wanted to limit all the cash going out. So there's that challenge. There's hryvnia versus euro devaluation. There's that challenge. So our approach will be we will put everything we think is relevant, and then we will put it on a vote for investors. Do you want to accept these terms and exit now, or no? So that will be our approach, proven by concrete situation. We will disclose everything, and it will be up to investors to make decision, because ultimately it's their money. It should be their decision.
Let's talk a little bit about right now. In terms of market cycles, we do go in these waves sometimes. Not necessarily very steady ones, but we do get surprises. Now, you already mentioned that with central bank interest rates already been reduced three times, I think, already. Potentially with quite a few analysts saying that it's going to continue to go down over the next foreseeable future. You said that fixed return sort of investments most likely providing the highest return at the moment for a certain amount of time. Again, the future is future. Everyone can guess. I think we have the 8 ball for guesses, that can always help to make a decision. But for new investors who think, I have 10K saved, 20K saved or something, but I'm new to investing world. And now I hear that I should be using this situation to secure the highest interest right now in a sense. But at the same time, I'm hearing that I should start slow with smaller sums because that will educate me and I'll avoid the risk. Where do you draw the line? What would be better? And I'm mainly referring to the new investors because in Lithuania, we have way too many of those.
First, there's an emotional side for investing. The worst thing you can do is make an investment and then you don't align with your emotional profile. Because one of the first things in investing, which you're taught by private bankers, is it's not going for higher risk or lower risk. It's what's best for you. Because if you are not resilient emotionally for fluctuations, go more for fixed or lower risk. Yeah? In long term, you will, who knows, where you will end up. Yeah? If on the other side you see that you're not motivated with very low returns and it's too boring for you and you want to have something more, dynamic where you can be more participating, because peer-to-peer, in that sense, is very good because you can participate. You can actually influence a lot. It's not like investing in ETF, which is basically covers all the world, and where's your decision? Nothing.
Invest and forget about
peer-to-peer, you can actually have, I think, to some extent, fun in investing because you actually can influence where your money goes. Yeah, but it very much depends on your emotional profile. Yeah, so if you feel like fluctuations won't impact you as an individual, go for more creative ways, more upside. If you feel that for you best is to have steady return, then I would advise to diversify. That's one, because diversifying doesn't mean that it's peer-to-peer platform and several investment opportunities. You should also go for other things, there's commodities or stocks or bonds, and also it also gives a very good opportunity for new investors to compare. How you feel that you invested in stocks and tomorrow they drop, but you have a fixed return asset which it doesn't fluctuate. It's fixed all the time. For some, that's the best solution. For some, it's not for them. So it depends.
In terms of a sum, let's take a practical example. Let's say a person already diversified between asset classes, but they, for whatever reason, decided that we want to invest 10K in P2P in general. Now, what should that be sort of separated between the objects in a sense? Should the person look at investing, because it's 10 euros per ability to invest 10 euros allows you to diversify this across ridiculous amount of objects. Maybe it's not a great idea because if you don't have enough projects, then you're going to have ridiculous amount of cash just sitting in your account. So should it be like, 10, 20, 50, 100 or
less? It should be a certain amount of things you can understand, you can monitor, and you can keep track of. If it's 100, good luck monitoring it. You will be tired after a few, shall we say, investment cycles. Because peer-to-peer offers you passive income. Passive means passive. You don't want to spend a lot of time. Maybe initially you pick a platform, you pick few things here and there and understand them, but it's passive. So if you would go more than 4 or 5 things in general to keep track of, it will be tiresome, in my opinion. One thing I would diversify is maturity, because if you invest and then you understand that I went only for short term, then after a month or two, again, you need to start reallocating your money. Again, too much energy, not efficient. If you invest in very long maturities, again, maybe you need the money, maybe you need the flexibility, maybe you just want to feel comfort that if you want, you can take it out. Or after a while, you've become a bit smarter, and then you would invest it in different assets. Yeah. So I would say not too many items, very hard to keep track of it, and be very smart about maturity.
So some of them for like 6 months, some of them for 12 months, some of them for like a couple of years maybe.
Yeah, I would go something short, because maybe after a few months you actually understand how the platform works and you have a different opinion where you would invest. But I would also not go like every week I need to go there, check it, reallocate the funds. So balance. Again, it's very individual. Someone likes to be more active.
Yeah.
For someone, that's just a problem.
Talking a little bit about regulations and licensing, European licensing came into play, and how do you think this will affect P2P world in Baltics, in a sense, as in a region? Do you believe this will attract more investors potentially from Europe? Because now it's a lot easier for them to actually, come here. And I think historically we look at higher rates compared to the Germany, England, so on and so on. Or do you think we will have more businesses potentially coming into the initially small market still? I know we're talking 100 millions, but compared to the rest of Europe, we're still small Baltic countries in a sense.
In general, again, we're fans of regulation, because if in peer-to-peer industry a platform fails, I mean, all the platforms feel it, because the general sentiment from investors' side falls. Yeah? And maybe, there was a platform which did, and everyone could see that it's not going to go well, but the investors didn't see it.
Yeah.
No one cares ultimately. If the investors are frustrated, they're frustrated on peer-to-peer.
All of them.
Yeah, so we are very much welcoming regulation, because if regulation can exclude market players, or not exclude, but discipline them or help them to think that...
Limit them.
Yeah, or limit their risk appetite, which at some point is too high, then in general everyone wins, because investors lose less money, they feel safer. I don't think that 1 or 2 extra points in return will be determining whether investor invests or not in peer-to-peer, but if someone fails, then everyone suffers. So I think that the more regulation is there, of course, healthy regulation, then the less failures will be in industry. And I think that for a while, actually, peer-to-peer has been performing well and gaining investors' trust. So we can see that in general, more money is coming to the Baltics. Since we are located in the Baltics, we have better access to Baltic businesses. In general, again, due to this financing gap, in general, same level business in the Baltics needs to pay higher interest, which is not super great for businesses, but it is a very good foundation for investors to be friends with peer-to-peer platforms from the Baltics.
Do you think this will attract more clientele from the rest of Europe?
Yeah, I mean, we can see clearly that in Debitum, most of investors come from Western Europe already now. We actually know, since Debitum has historic connection with Lithuania, then Lithuanians are a big part of our investor community.
Number 2, if I'm not mistaken.
Yeah, I think so, yeah. So Lithuanians is a special case for Debitum. But we don't focus on the Baltics for very objective reasons, because in Germany or Spain or France, where most of our investors come from, it's just a bigger market, and they are a bit, let's say, I'm from Latvia, so I would like to say just a little bit in front of us economically, how they're developed or how their culture of making savings in general. So for us, it's easier fruit, so to speak, low-hanging fruit for us. But since we're from the Baltics, we always try to promote investing and try to educate and be present in the Baltics as well, although business strategy is not to focus on the Baltics.
Now, again, maybe you recall this, maybe you don't, but is there any specific feedback from the retail investors you recall, which helped shape the decisions in Debitum? Maybe something on a platform, maybe something on the lending, maybe something else entirely, like how you approach it. Maybe you could share an example.
A lot. To be honest, we're very thankful for our investors and community, because we in general in peer-to-peer, I think the difference, that's a difference from maybe banks, is that we are very close to our partners, investors. We have Telegram chats. Our support is very engaged with people. So we communicate constantly. And we're very thankful to investors, because we actually get a lot of feedback. And for us, it's not like a critique, but it's actually an easy opportunity to fix concrete things.
And it's usually free. This is awesome, isn't it?
No, free, no, because there's a lot of IT involved.
In a sense, feedback.
Yeah. Feedback is no. Again, we very much appreciate that investors are active, and we've had feedback from small practical things, like we offered investment opportunities with longer maturities because we thought it makes sense, for us from our perspective. But investors have changed a lot our opinion, that we now have not only year or 2 year maturities, but we have 3 months, a month. So there's a lot of feedback. Actually, we constantly get this and that, and we always put it in Jira as a task, and we try to deliver it. Yes.
Your team is always busy with some new amendments, isn't it?
Yeah.
All right. Last piece in terms of new investors who potentially would like to explore Debitum a little bit more. Most likely majority of viewers will be from Lithuania, but maybe we'll share with some others. Is there any maybe current promotions or something we should look out for, in a sense, as they start to invest? Anything you could share and potentially guide them? We'll add all the links below the video so they can easily access it. But maybe any points from you? Yeah,
we have probably 2 hot things coming up. So one is this week we launched a campaign that if you are new to Debitum and you register and you decide to invest certain amounts, then we actually give a lot of bonuses, so to speak, so that we incentivize people to have motivation to do it now. It's up to investors where they invest and how they invest, but we wanted to achieve with this campaign that it's don't delay your decision. We will give you something very tasty, but if you really want to start investing, do it now, because for a week or 2 weeks we have a very good campaign, I think, where actually it's lucrative bonus for the newcomers. That's one thing. And second thing is we are now finalizing a new partner, because since we're growing, we don't add a lot of partners, but one we are really excited is a fund which acquires and sells forest properties. Before 2 years, I think it was financed by a professional investment fund in Valda from Lithuania. So it's kind of, we implemented same standards as a professional fund would do, and they already did finance them, and Debitum will have exclusive rights to finance them. So it's kind of, the team is very excited that we can offer investors something which professional funds would deem worthy of. And also we really like the forest sector, because it's something where, at least in Latvia, it's a big part of economy, and kind of makes sense that industry can generate those returns. So we think we have found a good partner, so we're really proud of that. And I think in upcoming weeks we're gonna explain more and give a lot of information about the new partner.
Cool. Well, by the time this comes out, most likely that's going to be live, so I'll add all the details in the description. But so far, super pleasant conversation. Thank you for allowing me to pick your brains about P2P world and the future of P2P world in general. I'm pretty sure it's one of many podcasts for the future side. And again, we most likely going to visit you maybe next time in Latvia, just so, well, you know, one episode from Lithuania, one episode from Latvia in a sense.
Agree.
So, yeah, thank you very much. For anyone who would like to test Debitum, try them out. Description for the best links and all the promo details which Eric mentioned. And we'll see you in the next episode.
Thank you.